Taiwanese index sitting with cuts of 1%, Hang Seng is down 1.5%, and that is the situation across the Asian markets.
We'll want to get the policy rate to a level where it is, where the real interest rate is positive. We will want to do that.
Morgan Stanley has upgraded Bajaj Auto to an overweight from an equal weight. Despite everything, right, despite that big gap down opening that the SGX was suggesting, this is not a bad outcome at all.
India is doing phenomenally well, I would say. Despite all the bad news, doom and gloom overseas, India continues to do quite well.
With the markets opening up and the Diwali and the holiday season starting, we've had a great start. And the fourth quarter is also looking quite promising.
Second half for rural is the best half. And fortunate the monsoons have been good, support prices seems to be good, infra is opening up. So we are very, very positive.
17,970 was the opening tick on the Nifty. So from that level, there has been a recovery of 120 points on the Nifty.
We are expecting a big revolution in next 10 to 15 years in the sweets market and as well in the savories market.
We have seen cuts of 55 points on the Nifty, but we have not fallen as badly as the SGX Nifty was indicating today.
Well, that was a day so far. It's been a volatile session, but it's been quiet as well. Of course, I can't say the same about stocks, which we will discuss plenty here over the next 60 minutes. I'm Prashant. With me in the studio is my colleague Reema, and joining us from the studio floor is Nigel, as always. Guys, hi. Good afternoon. I mean, so the market did see a bit of a dip buying early on. It was the day's low is the opening level, basically. We are not quite there yet. There was a pullback, which took us to the day's high. The market traded briefly in the green. And then the second leg started on the way down, which is where we are now. 70 points lower, 60 points lower at about the rough 18,000, 18,020 kind of levels. Lack of conviction. I mean, you can have outperformance on big down days when US is down big time, but for the market to be higher in the green on the back of a 3% down day overnight, I mean, that it's happened before, mind you, but it's always been a bit strange. So this is a bit of a neither here nor there kind of a market. Mid caps and small caps are flat to lower. Broader markets are not doing all that well. I mean, declines outnumber advances, not by much. PSU banks are an interesting area. So Bank of India, for example, reported numbers, good set of numbers. The space saw a very good run last 2 weeks. This week, so far, before today, was seeing a bit of a cool-off, but it's picked up again. It's a top-performing sector. And, post-Fed, the secondary reaction is usually important. Usually, the secondary reaction is when the first day, the initial reaction, and this has happened before, is when markets rally big time and then you see a dump, second day, third day, etc. This time, we've not seen that. There was initial euphoric move, which got sold into. The market overnight is closed lower. But even then, I think, will there be a continuation or, the market kind of stabilizes? I think that'll be important to watch. In any case, the message from the Fed chair was pretty clear. Rates are headed higher. Pace perhaps will be slower. But then once the rates get to where they need to get, market pricing is above 5% now. They'll perhaps stay there for a bit longer than expected. So that's where we find ourselves at. Here, relatively speaking, even with this 56-60 point cut, there is relative outperformance once again. Reema, hi.
Hi, it's quiet, but we've got the weekly options expiry. So let's see whether there are fireworks towards in the last 1 hour of trade. But it's clearly PSU banks which is topping the chart. The Nifty PSU banking index is up 2.3%, and the earnings have been very strong over there. Prashant referred to Bank of India. There we had the management. They indicated that they've upped the loan growth guidance for this year. They were earlier anticipating an 8 to 10% type of loan growth. Now they're saying conservatively, minimum, it will at least be 12% this year. Very confident on the asset quality. Gross NPA is coming in at a 28-quarter low. UCO Bank's numbers look very solid. That stock is higher by close to about 5-odd%. Even the other in the financial space, M&M Financial Services, MES Financial. So that's clearly the pocket where consensus expectations are very bullish, but the stocks are delivering on that. Indigo Paints is another one. Just came out with numbers, 10 minutes ago, and the stock is currently up 4.5%. Another interesting thing is many of these companies which reported numbers yesterday, the numbers were strong, continues to see follow-on buying and pretty aggressive. Look at Karnataka Bank, 20% upper circuit yesterday. It's followed it up with a 7.5% gain, good volumes. Redington, Varun Beverages, in fact, up for the third day in a row. So you could say that markets are overvalued, etc. But, when the numbers are good, you have seen buying coming through from investors, and then they don't care about the kind of stock run up. Shipbuilders, defense, we've been talking about this. They continue to gain. That's the performance today. If you pull up a week-to-date performance, Mazgaon is up 24%, Garden Reach is up 17%, while Cochin Shipyard too, Nigel, is up close to about 12%. But what have you made of the day so far?
Well, that's right. Rima, I'm just looking at the high of the day. That's at around 18,100 odd. The low of the day was what we did in the first few minutes at around 17,960 odd. So that's the broad band that we have. Now, since it's expiry, and in the next 60 minutes or so, that'll play out. I'm looking at the most active strikes today. And 18,050, that's very, very active today. The premium has come down substantially to around 10 rupees or so. But there was some writing being seen out there. On the downside, the 18,000 put, well, that's continued to see a good amount of open risk build up, and that was the key trigger for me. Yesterday, it unwound close to around 2.5 lakh shares odd. Today, we have seen addition non-stop telling you that the bulls, they are in control even on the downside. They're looking to protect the lows of the day. So the levels that we're looking at, the resistance is that around that 18,075 odd. I'm just plugging in the number. The 18,050 calls for a lot of open risk build up and fair bit of writing out there. The premium was around 30-40 rupees at that point of time. So that's why that becomes a bit of a resistance. While on the downside, given the kind of writing we've seen at the 18,000 put, well, the bulls are counting on today's low getting defended. If in case we breach any of these levels, then we could quickly see a 50-60 point move as well. So just keep an eye out on that. Rima.
Okay, let's tell our viewers what we've lined up for you on the show today. The Indian market's holding up better than the Asian peers after a Fed-induced sell-off on Wall Street. The Nifty is off the day's low, still holding above 18,000. The Sensex is down close to about 150 points. IT stocks drag. PSU lenders lead the way. A loser in trade, Voltas. Brokerages have downgraded the stock. Some have even trimmed the target prices as the company continues to lose market share. The rationale lined up on the show. In key earnings to track, we'll tell you what to expect from Hero Moto, Britannia and Cipla Q2 numbers on the show. And to discuss the markets and the road ahead at length, our alpha manager for the day, Varun Danga and Charandeep Singh, will join us in just a bit. All this and more in the next 1 hour.
All right, that's the lineup here. How should you position yourself in the last hour of trade? Mitesh Thakur is back with us for exactly that. Mitesh, you were talking about that, that gap area, which has not been filled, right? That this is the 28th to 31st jump that we saw. What would you do? I mean, for now, we are down about 50 points on the Nifty.
I think, Prashant, my belief is that that gap may not get filled because the overall chart setup is still positive. What is worrisome is the fact that on the hourly and the 2 hourly charts, there is signs of profit and tiredness. Also, the indicator setup was quite overbought. So that typically is a setup, which in about 75-80% of cases will give you consolidation, some sideways action. Sorry. The idea should be to try and buy towards the lower end of the range, which is closer to about 17,900, 920, and keep a stop below 17,800. And on the upside, be nimble in taking profits, unless until we see a breakout beyond levels of 18,200 again. So that's the way we'll approach it, but trading with more of long bias. I have a buy on IDFC First Bank. Disclaimer, there's a stock in my long-term portfolio as well, so I hold it. I have interest over there. But on the trading side, it's a buy with a stop below 56 for targets of 60. And Chola Finance is another one. So that's a buy with a stop at about levels of 743 and a target of 775 on the upside.
Okay, all right, Mitesh, we'll keep coming back to you. Get a sip of water as well. Just take care of that cough. Well, let's talk about a few stocks then that are moving around. And Voltas, that's one that's reacting quite violently. Even after its numbers, there was a con call as well. It appears it's pretty much disappointing. Faista joins in to run us through all of those details. Faista, over to you.
Thank you for that, Nigel. Well, Voltas results were out in the initial part of this week and the numbers have been soft, as you mentioned. Revenues, though, were up by about 5% on year-on-year basis, but margins have been the weak point, which has come in at 5.8%. versus 7.7% in the same quarter of last year. The expectations were at 6.6%. Now, in terms of segmental revenues, the unitary cooling products division revenue saw a marginal growth of 4%, though was lower than the estimates. The segment was impacted by lower consumer sentiment towards discretionary spends in a generally lean quarter that this is. The room AC market share has also lowered to 22.8% for 8 months of the ongoing calendar year versus 24.1% in the initial 6 months of the ongoing calendar year. The management has said that with high cost inventory position and competitive environment that the company is operating in, it will be difficult to achieve double-digit margin in the next 12 to 15 months. Now, in terms of what brokerages have to say, they say that the rising competitive intensity and margin pressures are the key risks in the AC segment. There are a couple of downgrades from the brokerages, which includes the likes of Macquarie, Kotak Institutional Equities, CLSA, BNP Paribas. All of these have the target price in the range of 850 to 900 rupees. There are also some buy ratings on the stock from Citi and Nomura and Jefferies, which are in the range of 1,000 to 1,200 rupees.
Okay, all right, Baista, thanks a lot for that. Well, Deven, coming across to you, Voltas, the market share has slipped a little bit. The street doesn't like it too much. What's your take on the stock?
Yeah, Nigel, good afternoon. Well, on one side, I think the overseas projects and I think the provisioning pertaining to that has dampened the profits for this particular period, and I think also resulted into a loss, in fact, due to provisioning. On the other side, I think the not so good news is about the market share and I think the growth. At the same time, the commodity pressure continues as far as I think the cost aspect is concerned on the margin side. So all in all put together, I think unless the recovery happens smarter, probably I think one will have to wait for a little longer time as I see it. Maybe as I think I would talk it out, I think this particular quarter is a washout quarter as far as the earning and the performance is concerned. Maybe we'll have to look out for the cues somewhere in the February, March 2023 for the better summer and thereafter the growth therein. So till that point of time, I believe that I think stock price might not perform as much as I think one would like it to be.
Devin, talking about poor numbers, the other one I was noticing is Relaxo. And I think the company joins us tomorrow for a chat, but numbers are a complete washout. The margins are down from 16%. I mean, basically, they've almost halved. Profits are down some 65-70%. Do you track this one? And by the way, valuations are almost at 100 times earnings.
Yeah, that's a challenge, Prashant, and I guess I think it is going to be true for many of the companies where the valuations are on a higher side. You don't have the scope for any kind of error as far as I think your business performance is concerned. And for whatever be the reason, though I have not gone through in detail about the numbers, but for whatever be the reasons, I think smallest of the the performance disappointment would possibly, I think, not be very kind as far as I think the market is concerned. I think the stock price will get probably punished. In my viewpoint, I think this is a period wherein most of the companies where I think the valuations have actually gone ahead far in advance for next 2 years. And I think the performance has remained muted. I would think that I think some amount of valuation derating is in place for many of the companies, not talking in particular about Nexo. But the point which I'm trying to say is that many of the companies where the valuations have peaked ahead of time could possibly be the ones I think would be suffering for next couple of quarters till the time I think the price correction takes place.
Okay, the company, even in Q1, it was a disappointing set of earnings from Relaxo. The company was trying to protect its margins at the cost of volume, at the cost of the top line, but now even the margins are giving way if you don't have volumes. So that's clearly hurting, Relaxo footwear this time. But let's talk about Indigo Paints that released its numbers. Revenues are up 23%. Mangalam is here with the fine print. Mangalam.
Well, the revenues of the company are up by 23%. The EBITDA is the one which has actually grown by about 45% for Indigo Paints, and the margins have expanded. And this despite the gross margins remaining flat. And as a result of that, the net profit has actually grown extremely higher. And the net profit is also aided by a 9 crore tax credit versus a tax expense of about 5 crores. So all these things have led to the big boost that we're seeing in the company's EBITDA as well as the net profit. Why is it that the EBITDA is higher despite stable gross margins? That's because the ad spends of the company are lower versus last year. Ad spends as a percentage of sales was 16% last year. Now it's 14.7%. And the reason for that is because last year the IPL was split into two, and the company has a lot of spends during the IPL. They have Dhoni as the brand ambassador as well. So as a result of which they spent a lot more in the second quarter for advertising, and that has come undone this time around. And importantly, the commentary is something that the street likes because the company is saying that now that raw material problems are subsiding and the worst is behind, they will expect to focus on growth going forward. And future focus will be on aggressively increasing growth with expecting much sharper increase in profitability. So these two lines from the management commentary is something that the street likes. These numbers are good, but a large part of that goodness is purely optical.
Okay, thank you very much for that. The stock is now up close to about 12%. Devin, any thoughts on Indigo Paints? And earlier this week, we also had numbers coming in from Kansai Nerolac. Thoughts on the industry itself?
Well, I would think that the industry per se is having relatively better time, largely because of the fact that the raw material prices have come under control. And at the same time, the demand scenario remains upbeat. So obviously, I think the growth on one side and I think lower cost on the other side is adding into the possibility of companies reporting relatively better performance going forward. So the preference in the pack would be definitely Asian Paint, which continues to be the leader, and I think the would dominate the kind of a show, given the sheer size and the volume that also they have. The likes of Indigo could possibly be the next best choice, I think, as I would like to call it. Maybe I think one will have to watch a little bit more carefully about I think how exactly they increase their margins going forward.
Thank you very much, Devin, for that. Do stay on. Need to slip into a very short break. We'll come back and continue talking about the markets. Our Alpha manager for the day, Varun Daga, and Charandeep Singh will also join in. Welcome back. It's flat on the index, but it's a day of big gains and moves on individual stocks. So one of them is M&M Financial. It's up close to about 13% in trade post their Q2 numbers. The Q2 numbers were very strong. The Q2 dispersals came in at a 16-quarter high, but thereafter, in the month of October as well, we saw a very sharp increase, I think 28% increase on a month-on-month basis in the October disbursements compared to the prior month. Listen in to what the management had to say when we chatted with them earlier.
Clearly, maintaining a 10,000 plus crore disbursement should not be a challenge. The second half for rural is the best half. And fortunate, the monsoons have been good. Support prices seems to be good. Infra is opening up. So we are very, very positive in terms of the trends that we see in the rural market, both from demand as well as from the collection front. AUM, we are already clocking 15-16% growth, and the disbursements are more aggressive as we see from the numbers. So therefore, maintaining this kind of a double-digit growth on the AUM should not be a challenge again.
All right, well, management sounding confident there. They're also talking about ROAs of around 2.5%, NIMs of around 7.5%, and good growth in terms of disbursements as well as on the AUM front. By the way, Devin, coming across to you on Mahindra and Mahindra Financial Services. Before that, just want to point out Rainbow Medicare Hospital. Well, the numbers look pretty good. Big growth on the top line, close to around 18% out there. Margins have expanded a little bit to around 35%, and profitability as well has surged up. And that explains why the stock is within 1.5% from a 52-week high. So good going out there, and I think the stock has perked up a little bit. But Devin, as promised, tell us what's your view on Mahindra and Mahindra Financial Services. Looks good. Stock blasted away more than 10%.
Yeah, I think despite of that one-off kind of a provision that they had to make in this particular quarter in the reported result, I think this strong commentary has possibly helped. And I think what very surprised, because I think in the rural area, the activities are quite robust, and particularly the segment in which they are in the farm equipment segment, I think where the demand scenario remains, I think, extremely strong. So the disbursement, I think, which they are talking about, which is, I think, eye-popping number, at least I think it is in this particular reported quarter. And continuing that further, with 9% sequential growth that they reported in this disbursement, I would think that I think going forward situation could be relatively much stronger. And that's where probably the argument would be that the stock can be held into the portfolio. Maybe the corrective dips, I think, in the market whenever it gives an opportunity to add such kind of companies into the portfolio.
Okay, Devin, it's a pleasure. Thank you very much for joining us and running us through what you're making of things. Well, 45 points lower. So it's a, in percentage terms, it's nothing. It's a flat kind of a day. But so much happening at this individual stock level. We've discussed a bunch of names. Look at Piramal Pharma. We had that at the bottom as an alert, 6% higher. Varun Beverages, we had the company with us in the morning, sounding extremely confident. Numbers, of course, were very strong. and these are, of course, high-quality businesses, Varun Beverages. There is Reddington, which continues on the trot for the second straight day. Biocon, it's been a huge underperformer. That's up about 5%. Some of these rail infrastructure stocks like RVNL are coming up about 5-6%. UCO Bank, again, in the PSU bank space, I mentioned Bank of India, but look at UCO, that is up about 7%. Indigo Paints, of course, we highlighted as well. So this is a stock-specific, broader market, mid-cap kind of market that you are looking at, not so much about the index, really. Charandeep Singh and Varun Daga, co-founders and fund managers at Girik Capital, are joining us to take some questions now. Thanks, gentlemen. Great to have both of you here. Charandeep, just a quick word first to kick off our discussion on what happened with the Fed and the US price action overnight, and whether that kind of caps gains from here. Or you think, that's no problem. And outperformance, resilience here, which have been hallmarks of the market this year, that continues in an outsized way even from here. What's your sense?
I guess you can't argue with the market. It seems to have a mind of its own. Hard to predict this. At the end of the day, there are enough stock-specific opportunities, thematic opportunities in the markets, and we basically spend our time going out and hunting for those, rather than worrying about how much the Fed is going to raise interest rates and how overall markets will react. So we'll focus on the underlying stocks and the underlying earnings growth. And that'll be what our focus would be for the next year.
All right. Hi, gentlemen. Good afternoon. Nigel on this side. I'm just looking at your portfolio, and Bharti Airtel appears one of the top allocations. Earlier, it was Reliance. Could you tell us, have you changed things around a little bit?
I'm happy to take that. Very, very briefly, Nigel, look, we're of the view that there are some super trends on in the Indian economy and in the Indian market. And one of them is that earnings in telecom in general are going to go up a lot. There's a lot of good tailwind from price increases that both Bharti and Reliance are benefiting from. So, we're taking a telecom view on the sector a little bit. There are only two players here, really. So, we may play with weights a little bit here and there. But in general, thematically, this has been something that's been in our portfolio for a long time. And, we continue to hold these and believe in these earnings stories and these earnings acceleration stories because of what I mentioned.
Okay, all right. Got that, Charandeep. Thanks for clarifying on that front. So telecom is a space that you're like, and you're moving things around. Maybe you're changing the weightages on both those two stocks a little bit. But, we have a lot of guests who come on the show. And when we ask them sometimes about these new age themes, it's a blanket no, or it's a blanket avoid. Part of your portfolio, you'll have Zomato out there. And you'll have, indicated that you all are fairly positive on this space. Could you tell us whether there will be a whole host of new age companies where there will be supply that could potentially come in there? Are you all scouting? Are you all looking at them? Maybe the Nykas of the world where the business is quite solid, while a Paytm is a third of what it was at the IPO price. Have you looked at any of these? Would you all be interested?
Sure, I can take that. Thanks, Nigel. So, I think rather than looking at new age as one basket, I would say that one has to go into each companies, and I think each one of them have very different fundamentals and very different triggers. So, each one of them have their own fundamentals. So, and something what we liked was Zomato because it was more of a story which we felt that has a long tail and a two-player market. We like that industry. We think it's getting consolidated. It's getting organized. We feel that there will be some discipline in pricing. So that's about it. And we thought that the price also has come into in favor. So a lot of these companies, the prices are now coming in favor in terms of valuation, and one needs to go very, very stock specific, bottom up, and see if there is some light, some sight in terms of earnings and in terms of profitability. And if one can see that, I think some of these are decent franchises if bought at the right price.
Varun, afternoon. In the PSU banking space, you have State Bank of India. But the mid-cap PSU banks are also reporting very strong numbers. Would you look to buy into some of these smaller ones?
Yeah, I think that's a good point, and we've been quite bullish on the sector for some time now. But we obviously picked the best or the largest in the sector. But I think the main theme here is basically, we were seeing some data, and now, of course, there's a lot of talk about it, but the slippages have come down for many of these PSUs from almost 8-9% to around 2%, and it's improving. And for the first time, we're seeing many of these banks talking about growth going forward. So I think it's an interesting space. Of course, they all are in a good environment because they've been able to raise rates, but now the deposit rates will also go up. So there will be some NIM compression, but overall, we feel from a structural point of view, I think these are very, very interesting stories. Of course, near-term euphorias and right entry points one needs to see. But yeah, these are large banks, and if the growth continues, then, and if also the NPAs have really come off, and if no new blunders are made, then I think there is definitely money to be made in some of these companies from 3 to 5 years perspective.
All right. Gentlemen, stay with us. SRF numbers are flashing at the bottom of the screen. I think we can go across to Sonal, who's standing by to get more deep. Okay, I think we'll have that up in just a bit. The stock went up sharply. It's come off. EBITDA seems to be below expectations. And revenues are a little under, but not by some 2.5% kind of miss on revenues. But EBITDA seems to be materially lower as compared to what the poll was indicative of. While we wait for SRF, let me just pose one more question. Varun, you own Metro Brands, right, in your portfolio?
Yes, we do.
I don't know if you saw the numbers from Relaxo Footwear. We were talking about this earlier. Numbers are pretty poor. Now, is that a function of being in completely different segments? Any thoughts at all? I mean, footwear, but one is perhaps on the premium end, the other is mass. Is that how you'd look at it? If you've looked at the numbers, that is. Go on.
Sure. I mean, I don't want to get into each results, but I think the models are very different. And one is a brand-specific guy, the other is a retailer. So I think one needs to get into, each segment and how they've done into, different formats, because they also run different formats. One is, our major sales for Relaxo comes from the MBOs, which is, multi-brand outlets. For Metro, it's a completely different model. So I guess one needs to understand where they are in terms of their formats, their models, and also there is a lot of competition now that's creeped in from a lot of new brands online. So one needs to see who is on top of their game. But I have not got into great details in terms of Relaxo.
Okay, stay on, Charandeep and Varun. Let's address the SRF numbers. My colleague Sonal looks at the numbers closely. She's analyzed them, and she's here to give us her initial take on the numbers. Sonal?
Thanks a lot for that. Well, it's a definite top-down miss as far as SRF's numbers are concerned. Revenue slightly lower than estimates, but the bigger miss definitely has come in on the margins at 20.6% versus an expectation of a 24% margin. The expectation was that, yes, margins will improve on a YOY basis, but that has not happened. This has led to a profit miss as well, though profits have increased on a YOY basis. But if we look at the segments, what has not done well for the company this time around, both packaging segment and technical textiles, they have seen a decline in revenues, plus they have seen a decline in margins as well. Specialty segments, on the other hand, continues to fire on all parameters. Chemicals revenues are up 62%, and their EBIT margins have gone up by 600 basis points, coming in at 28.2%. If we talk about technical textiles, there the revenues have declined by 16%. Packaging volumes have gone up by revenues have gone up by 23%. That is led by higher volumes coming in from new facilities.
However, because of extra supply coming into the market, BOPET spreads had come down, and that's why the EBIT margins have fallen by 1,000 basis points. So definitely the laggards here are the technical textiles and the packaging segment, and the miss here is much more than what was expected, and hence the margin miss is what we are seeing on SRF. So it goes down as a top-down miss.
Okay, all right. Thanks a lot for that, Sonal. Charandeep and Varun, in your portfolio as well, you'll have Gujarat Fluoro. I recall at one point of time there was that valuation catch-up that had to take place. Both those two stocks are up between, 5 to around 6 times in the last 4-5 years or so. You'll still believe that there's a good runway for some of these companies, specialty chemicals companies?
Nigel, I think it's very stock-specific rather than sector in this case. If you see the specialty chemical sector too is very large, and they have, so many listed companies in there. So, in this particular case that you mentioned, there's, it's completely stock-specific at play, and it's a large capex and earnings growth story actually. It's a very specialized company. If you look at the whole sector, India has a decent fluorochemistry sector in terms of Navin, SRF, and Gujarat Fluoro. Of course, they are all in very different specialties. One must also be watchful of the fact that they could start getting into each other's territory a little bit, although it's too early to mention that. All this said, if one has a long time horizon and to have 4 to 5 years to hold on, there's definitely a lot of tailwind over here, right? Near-term valuations are a challenge in many of these companies. So one has to be able to sit through certain pain in the event near-term earnings expectations are not met. That's the only thing that we'd want in such a case.
Gentlemen, thank you very much for joining in. Have a great day. We now need to turn our attention to our IPO corner. Bikaji Foods IPO has opened for subscription today. It will run till the 7th of November. Mangalam is here to tell us more about the company and the issue.
Well, as far as the company is concerned, it is India's third largest ethnic snacks company in India. The issue is a 900 crore, roughly 900 crore offer for sale, which is, seeking the company to have a post-listing market cap at the higher end of the issue price at around 7,500 odd crore rupees. It is the largest manufacturer of bhujia in India as well as namkeen. So just telling you that 35% of their revenues come in from bhujia, 39% comes in from namkeen, some comes in from western snacks and sweets as well, which is a highly unorganized market. So the shift about unorganized giving way to the organized industry is something that everyone is watching out for. They have a strong brand, but we need to keep an eye out on a couple of risks as well. The biggest one is that of competition coming in not only from local and domestic players, but a lot of these MNCs who are eyeing the Indian palate as well. There are geographical limitations because of the GI patent of Bikaneri Bhujia. The aggregate value of related party transactions for the company is also about 10% of their sales. And importantly, they have unsecured debt investments of around 117 crores in group companies, and raw material inflation is something that we will have to watch out for going forward. The last year they did revenues of around 1,600 crores with 7% margins, but they have capacity of doubling the revenue to about 3,500 crores from here. And even if the company doubles their net profit from levels what we've seen in the previous couple of years and does about 100 to 120 crores, it's been offered at around 58 to 60 times FY24 earnings. So that's elevated even by FMCG standards.
Right. Mangalam, got a couple of hungry people in the studio with all that talk of bhujia and snacks and whatnot. Thanks very much. But, the IPO of Global Health, which operates the Medanta chain of hospitals, also opened for subscription today. It's going to be another interesting one. So one more hospital chain in the listed space soon. Ekta is here with details that you must know about the issue. Ekta, over to you.
Well, yes, it has opened for subscription today, and up till the 7th of November, price band is 319 to 336 rupees. They're looking to raise a little over 2,200 odd crores on the upper end. Now, the implied market cap is anywhere between 8,580 crores to a little over 9,000 odd crores. It's a combination of a fresh issue, which is worth around 500 odd crores, and an OFS, offer for sale, where Carlyle will be exiting from the company. Remember, Carlyle entered in 2013, and they've already struck a pre-IPO deal for an equity of around 6% and now with the OFS they will be exiting the company. Fund utilization from the fresh issue 375 crores will be invested in subsidiaries of the company, eventually used for debt repayment. Now about the company, it is run by or promoted by Dr. Naresh Trihan, the renowned cardiac surgeon, and it operates a network of 5 hospitals which is mainly in the north and the eastern markets of the country. They have 6 multi-speciality clinics as well, and they have 1 hospital which is coming up in Noida. A total of around 2,500 beds is what they have currently. A couple of key points: it's a strong doctor-promoted name within the entire hospital space. Occupancy rates have been around 59-60%, so there is potential to improve. The average revenue per occupied bed has risen to around 60,000 rupees, so it has potential in terms of an upside. International revenue is picking up. It was at a peak at around 11 to 12%, fell to 4% and has now risen to around 6% New verticals are in a nascent stage in terms of growth, so we can expect the likes of pharmacy, home care. They are exploring diagnostics and digital as well, and the company is looking to expand their bed capacity. In terms of margins, they stood at around 20 to 21% in the previous quarter, and in terms of valuations, they stacks up at around 18 times EV to EBITDA on an FY22 basis, and that's largely mid-range. It's cheaper than the likes of Apollo as well as Narayana as well as Max, but it's a little more expensive than a couple of the smaller ones.
All right, Ekta, thanks a lot for that. Well, we're almost at around 18,060 odd. We have perked up a little bit in the last few minutes. At 3 p.m. move, well, we've recovered close to around 30 points from the low point of, the last 1 hour or so. So just keep an eye out on that mark. 18,070, I think that's a crucial mark. If we get past that and we trade about that, we could see a quick bounce. For the time, we will slip in a short break. On the other side, Nimesh is waiting for us. He'll tell us what's going on in dealing rooms, industry chatter. We'll also get our technical experts who will be back with us. Welcome back. Well, we've perked up a little bit more, but as promised, let's get chatting with Nimesh. He's joining in. Nimesh, tell us, what are you picking up? The flow is still solid, irrespective of what the Fed is doing?
Oh, absolutely. That's been the consistent feedback that the flows are strong, and that's been reported in the numbers as well. Yes. I don't think the bulls will be disappointed with today's outcome, Nigel. Clearly, look at the tone of Fed. It was so hawkish. The US markets fell sharply last night, and still we are almost about to go in the green.
Yes.
And the breadth is quite positive in today's trade. And again, today, the rally is largely led by the financials. And that's been the consistent feedback that the FI money is chasing the financial stocks. And within financials as well, you're seeing a bit of churn happening. So the PSU banks are doing good. The small private banks for the last couple of days are doing very good. So that's where the money seems to be chasing out, within the larger institutions as well. So that's something to watch out for. I guess, for second day running, we are seeing the mid-cap and small-cap indices outperforming or relatively outperforming the larger indices. So that shows that there is a bit of confidence back from the retail investors as well. The HNI investor seems to be quite active in their selective names. So that pocket seems to be now catching up and doing a bit of catch-up exercise with the large moves in the large cap names. So that's playing out. I guess from a technical point of view, the 17,800 to 18,300 seems to be a bit of a band for the Nifty for the time being. So any decisive move has to happen either on the either side. For a new rally to happen, we have to cross the all-time high of 18,300, 18,350 odd level mark. So that's a technical level to watch out for. But from a flow point of view, there is participation from the institutions, largely in the financial names, so that's playing out. And even the retail participation seems to be back with the kind of outperformance we are seeing in the broader markets.
All right, so we've got how the markets are shaping up. And Nimesh, you said it right. If someone told us at the start of today you'll be down 15-20 points at the end of trade, you'll say you're kidding.
Yeah, exactly.
But it seems that's pretty good news. But what about individual stocks? What are you picking up now?
So there are a lot of names which are buzzing in trade today. So the first stock on my radar today is Unichem Labs. That stock in a market like today is up 7%, good volumes as well. And now the street is sensing some sort of a corporate development in Unichem Labs. So that's the reason why that stock is buzzing in trade today. So that's the first one. The second stock is Tata Steel. Now, again, within the metals name, there are diverse moves, but Tata Steel stands out today purely on back of strong flows at an FI desk. So looks like at around 100 levels, there is a bit of consistent buying now from larger institutions into Tata Steel. So that's the second one. The third stock is IDFC First Bank. as I said, there is money chasing the financial names, and within that, the outperformance is in the smaller banks. And IDFC First Bank stands out today purely on back of strong flows. So it looks like even in IDFC First Bank today, the volumes are going to be on higher side. Just want to add a bit on IDFC Limited as well. The street is anticipating some sort of announcement in IDFC Limited as well. And hence even that stock is buzzing in trade today. So that's IDFC First Bank for you. And the last stock is CAMS. Again, a bit illiquid stock. They normally don't see large volumes. But what I understand, some of the, at least one of the large AIF investors is looking to actively accumulate this particular stock. And there are buy flows as well at institutional desk. So CAMS stands out largely, though the stock is under pressure today, but there is buying happening at lower levels from domestic AIFs in CAMS as well.
Nimesh, thank you very much for that. By the way, it looks like Tata Motors DVR has completely fallen out of favor from the investors. It had a relentless one-way up move, but today on large volumes, Tata Motors DVR is down close to about 9.5%. So pull that up for you. Very sharp crack seen in Tata Motors DVR after the recent run-up in the stock. Mitesh Thakkar is still with us. He's going to tell us what you can buy today or sell tomorrow for a reverse trade. Mitesh?
So I have, in fact, one cash stock Nima on the list today. That's RITES, and the rail stocks are doing very well, and RITES has given a fresh breakout. So BTST here with the stop below 400, targets of 4154.18 for tomorrow. And the other one is another mid-cap stock. That's on the F&O side. That's India Mart. That's breaking out nicely towards the end of the session today, and that's a BTST with a stop at 46.85 for targets of 47.50.
Okay. Thank you very much for that. Let's talk a bit about the global picture. The big talking point, the highlight was what came out of the Fed. Prashant has analyzed it, and he's going to tell us what the implications are. Prashant?
Who cares about the Fed, right? Because the markets kind of just shrugged it off. And the reaction has been startling. We've seen this kind of price action before. But this is not going away. It'll come back tomorrow. It'll be a factor when we analyze markets in the coming days, weeks, months as well. And what this graphic basically tells you is what the market expectation of the Fed funds rate and how that has moved. This is Fed funds rate and where it is likely to peak, what we describe as the terminal rate. How much will the Fed hike to ultimately before it pauses or before rates start to drop, right? And this is all the way from January of this year to today. Now look at this. In January of 2022, market expected that the peak Fed funds rate, you basically will need maybe 2 rate hikes of 50 basis points and you'll be done. Look at what happened, where we were in April. It is 2.5% was the expectation of where the peak rate is going to be. By this time, the FOMC, the Fed had started to say that we'll need to do a lot more. This also is a graph which shows you the disbelief that the market has had that the Fed's not going to go all the way. This is not Paul Volcker 2.0 as many are now saying perhaps it is. Look at what the expectation was in June, 3% and done. A pause or maybe cut or whatever. Last week that was 5% or so, under 5% actually, and post the rate hike, the Fed funds expected sort of peak rate, the terminal rate has moved up to 5.5%. This yellow line, by the way, is nothing but the actual Fed funds rate. We're at 4.75%, and after yesterday's decision and the hawkish talk by the Fed chair, the expectation is that this 4.75 will go up to 5.5, another 75 basis points before they kind of stop and maybe keep the rate there for some time to come. So this is, I think, a pretty startling kind of graph which shows you the gap between what the Fed kept saying it will do and the market kind of saying, well, probably not. Let me just quickly read out just one portion from Fed Chair Powell's comment, which basically highlights that according to him, the risk of not tightening enough is far higher, the damage it can do, than to over-tighten. So it's, in a way, what he's saying is it's better to over-tighten. And this is what he said, and I quote, if we were to over-tighten, we could then use our tools strongly to support the economy. Whereas if we don't get inflation under control because we don't tighten enough, now we are in a situation where inflation is now entrenched and the employment costs in particular will be much higher potentially. So I think this is as clear as they come. We were expecting that the Jackson Hole 8-minute speech is as strong and clear as any, but I think last night it was pretty clear too. Back to you, Rima.
Thank you very much for that. I think one of the reasons why the Fed fund rate kept rising is because look at the way Powell's language changed, right? In March, he said he expects a soft landing. 2 months later, he said softish landing. In August, he said policies will bring some change, some pain to the consumers and business. And yesterday, he said that the chances of a soft landing have narrowed, right? So it's been so hard to call this from an economy and inflation point of view that, they've been getting it wrong and the markets are continuously repricing themselves. But let's invite Kunj Bansal of National Institute of Securities Markets on the show now. Kunj, it's very, very quiet on the benchmark indices. You would have hardly thought that one of the most anticipated events, took place yesterday, just going by the market reaction. But you can see big moves in individual names. Right now, something like Elecon Engineering has spiked up. It came out with numbers in the afternoon, towards 12 o'clock, but the stock reaction is taking place now, 7.5% higher on that. And across the board, PSU banks are doing well. So Central Bank of India is now up close to about 6%. Any interesting stock recommendations, anything in the earnings season that stood out for you?
Yeah, sure. So before I come to a specific stock recommendation, let me just briefly touch on the market point that you said that on a day like today, when on the expected lines, Fed hiked the interest rate by 75 basis points in the US and US market fell. For us to remain flat itself is a kind of a positive move, even if we are not actually net positive, because otherwise the expectation was that in line with the global market, especially in line with the US market fall, we will also fall. Of course, it also is backed by the fact that we are up about 7% from the recent lows of 16,800 odd Nifty that we touched in the last week of September. And the fact remains that on a year-on-year basis, we are flat, which is good compared to all the global markets, which on a year-on-year, on a one-year basis are down anywhere in the range of 15 to 20%, more specifically the US, the China and the Hong Kong. In terms of the result season and stocks, yes, so the PSU banks that you covered have been doing exceedingly well, and market has been rewarding them. Finally, the share prices have been continuously going up, hitting 52-week high, almost all the larger PSU banks. For me, one of the specific recommendation, the result which came in last 2-3 days is a company called TCI Express. It's a logistics company, very well known. So that company has given decent results. Top line growth doesn't look as exciting because it's just high single to low double digit, but the fact that margins have improved in this kind of difficult environment because of the lot of automation that the company has done, because of the sorting centers that the company has set up, and the fact that company has earmarked some more capex, if I remember correctly, about 100 crore to do more automation and more sorting center will lead to further increase in the EBITDA margin. So that's a stock which came to the limelight. The other stock which came to the limelight, a company called Timken India. Of course, the results were weak, and as a result, I think we have seen about 7-8%, maybe 10% fall from the recent highs. But that was mainly backed by the fact that the company had high cost inventory from the previous quarters in the September quarter. Now going forward, that should ease off. And the fact that the demand continues to be there from the railways to which it supplies, from the automobile industry to which it supplies, and to the capital goods industry to which it supplies. So valuation, of course, is expensive, but given the fact that company operates on high margins, high return ratios, the valuations will remain expensive. So these are some of the ideas that came in notice in the mid-cap space.
Okay, all right. Hi, Kunj. Good afternoon. Nigel on this side. I don't know whether you track Eveready Industries. That stock is up close to around 12%. It's flying away. Volumes as well have picked up. It's been one of those big underperformers. So the hope was there's a new management that comes in. They'll change things around and things will improve. That's yet to be witnessed. At around 325 rupees odd, would you look at the stock? Remember, the promoter, I think, launched an open offer at around 320.
Yeah, so I don't know why suddenly today there is a flare up. It just might be some buying, or if some news is there, I have not been able to get info on that. But the result was weak. You are right that the management changed and the expectation was that new management will do. But it's not that the new management can do things overnight. The fact remains that the commodity prices have been very high. And like all other industries and companies, this company also might be having high cost inventory carryover from the previous quarters or from the previous months. So to that extent, it might have been difficult to improve the margins. In fact, there is a dip in the margin. And on the top line, we all very well know that the rural demand is still showing stress. So if we look at the commentary from the other consumption companies, both FMCG as well as consumer durables, the demand in the rural area continues to be at a stress. And this companies, I don't exactly remember the number right now, has a reasonable amount of its sales in the rural area. So that way the results were weak, but as I said, the new management can't change things overnight. Hopefully things will improve going forward. The macro factor will support will have to be there in terms of industry, but I think companies' fundamentals will improve going forward. What will be the right time to enter? It's very difficult for me to predict.
All right, thanks very much, Kunj, for that view. We'll take a quick break here. We'll come back and more on markets. There's 7 minutes to go for close, and it's a flat kind of screen. 18,050 is where we are at. Market breadth is almost 1:1 at this point. We're back in just a bit.
Okay, Adani Wilmar is down close to about 2.5%. It reported numbers weaker than what the street was anticipating. We already had a Q2 update, so we got a sense of what the street was anticipating, but margins have come in on the lower side, and that's disappointed the street. There is a conference call at 3 p.m. today where we will get greater clarity. Kunj Bansal is also with us. Kunj, in some time we will also have Hero MotoCorp's numbers. Your expectation from the auto pack, and do you like any of the stocks?
Yeah, so Hero MotoCorp number we will have to be waited and watched out for. The monthly sales numbers are already known to all of us. In fact, post the September quarter numbers, the numbers for the October month, which came yesterday, were down on a month-on-month basis, and if I remember correctly, on a year-on-year basis, which is partly a surprise, and continuing the discussion reflects still the fact that in the rural demand there is still stress. So that is something that is a key monitorable. And similarly, so that may have an impact on the Hero Motors price. Of course, the EBITDA margin is something that also will have to be watched out for. In terms of a stock, I think Maruti came out with numbers a few days ago, and the stock moved up very sharply after that because of better than expected numbers. The company showed good improvement in the margins. Sales were largely in line because the monthly sales numbers are very well known. So that stock had moved up. Now with this smallish correction in the market, the stock has corrected, I think, 6-7% from the recent peak. So that's a stock where the result uncertainty is behind us because the September quarter numbers are known. By now, the October month sales are also known. The fact that commodity prices are continuing to come down is a positive for the whole auto industry. The little bit of concern is the fact that the global crude price has again started to inch up. So something Brent, which had fallen below $90 some time back, has inched up to 90, 92, and is now hovering around 94. So that is something which should continue to, which will be positive if it falls again below $90 at least. Other than that, all the factors are positive for the auto industry, and as I said, Maruti, for the reasons that it gave good results and the result uncertainty is behind us, looks a good investment for the
Kunj, it's a pleasure. Thank you very much, as always, for being with us here today. By the way, we're ending with about a 30-odd point gain, and this would qualify as absolutely a win for the bulls, no doubt about it. Mid-caps and small-caps doing even better, both ending about 1.5% higher. I mean, actually, things picked up on that part of the market in the last 60 minutes. Bank Nifty also doing much better than the Nifty. There, I mean, the private banks did not do all that much. I mean, the private bank index itself was just 0.5%, but the PSU bank index was up 3%. Actually, is the top performing index today sectorally. Nifty stocks, SBI top of the list with 2% gain, Titan 1.5 higher, UPL, Bajaj Auto and Bharti are the others, which registered between 1 and 2% odd gains. But I mean, so many others which end higher, but not by much. Rima.
I'm going to rattle off some of these financial names in the broader markets which did very well. So M&M Financial up 13%, MES Financial higher in trade, Karnataka Bank rallying for the second day in a row, South Indian Bank, Bank of India where the numbers look good, UCO Bank, across the board, Central Bank of India, all of them higher in trade. Indigo Paints, where the bottom line was boosted by a tax gain. Indigo Paints rallied close to about 9%. Reddington higher for the second day in a row. They managed to skirt all the weakness that we're seeing in the global markets and report good numbers. On the losing side, Voltas sulked 5% as it continues to lose market share in the AC or the unitary cooling products market. Relaxo Footwear, very, very weak set of earnings, Nigel.
Well, that's right. A couple of other notable gainers. Raymond came out with a set of numbers late in trade, and the stock popped up close to around 6%. Everready, I don't know what went on there. Massive volume. Stocks ends higher with a gain of close to around 14% odd. Well, it's been a good outcome. Waking up today and looking at the Dow, you would have been a little bit fearful, but the decoupling theory played out. The buy on dips theory did play out. Let's see what the coming days does hold for us. But for today, the bulls will be very, very satisfied with the outcome that we had. For the time being, we'll wrap up on closing bell. Up next, our Thursday special. Big deal comes up next.